first and very important thing, taxation paper is basically conducted according to a Finance Act. And our relevant Finance Act is Finance Act 2021. The students who sat in this exam in June 22, in September 22, in December 22, and in March 23, Finance Act 2021 is relevant for all the participants, for all the students who are taking TX exam for March 23. In fact, from June 23 onwards, the Finance Act will get changed. So the basic point for discussing this thing is that it's very important for all of us to pass this exam in March 23, because if we let's say unable to manage to pass the exam, we have to resit this exam for June 23, but that exam will be according to Finance Act 2022. So I would appreciate if you please make your efforts, make your put your energy in studies to pass this exam, because there's a last exam session according to the Finance Act 2021, which is being conducted in March 23. Furthermore, the participants who recently joined, I can guide you again. Taxation paper is being conducted according to a Finance Act, and our relevant Finance Act is 2021, and it's the last exam session in which TX is examined according to this Finance Act. From June 23 onwards, for the next 4 sessions after March, Finance Act 2022 will be applicable. Now, let me guide you the agenda of the workshop. The first 2 days, which I would be conducting the first 2 days workshop today and tomorrow, and the next 2 days workshop will be conducted by my co-tutor named as Mr. Kambar Raza. So I can give you the agenda of the day 1 and day 2. It's basically our day 1. What we are going to do is that quick revision of basic things, and further, after quick revision of the few areas, we shall be practicing exam question on ACCA CBE practice platform. And the relevant question will be practice exam 1 question, section C areas, and the first question will be according to tax planning. And tax planning question is examined in section C of the paper. Tax planning question is examined in the section C of the paper for 10 marks. But these 10 marks are very important because the tax planning question is not from a specific area. Like 2 other questions in section C, the constructive response questions in section C are basically the other 2 questions. One question is from income taxes, second question is from corporation taxes. So the areas for other questions are defined in section C. But if we talk about tax planning question in section C, so keep remember tax planning question, which is examined for 10 marks in section C, is not defined that from which area examiner would be asking the things. It's all about the entire taxation knowledge, which you study from start till end. So tax planning question can be examined from any area of the syllabus. We cannot say that it will be an income tax question, it will be a corporation tax question. No, it can be a mixed situation question wherein the capital gains like inheritance taxes, anything can be asked, can be examined in this 10-mark question. Furthermore, now, as I told you, we shall be revising few basic things, and then we shall be practicing this practice exam 1 section C question. which is for 10-mark question. So what are the relevant areas to be discussed before moving towards the question? The relevant areas, like I'm giving you a scenario, you have to think about that. And the same scenario is basically there in the practice exam one in the text planning question. So what's the scenario I'm going to give you is that, think you are making or registering a company in which you will be an employee or director in your own company. For doing business, two options are available for each: as an incorporated business, means as a sole trader business. The second option is available for all of us, that we can make a company, we can register a company that is incorporated business basically. So I'm giving you a situation: you are making a company, you are registering a company, you will be an employee or director in your own company. Means what will happen if you would be the director or the employee of in your own company? What will happen? Then you have an option to extract profits, to extract funds in the form of salary, commission, or bonus. Because considering yourself as an employee, now you have an option: you can extract funds in the form of salary, commission, or bonuses. Because each employee, whenever gets anything from the company, so that is basically termed as, all of these can be classified in an income head termed as employment income. Furthermore, you will also be the shareholder of your company. Due to this shareholder status, now another option is available to you. You can extract funds from your own company in the form of what shareholder gets. I would appreciate if you please answer my questions. Being a shareholder, how you would be extracting funds from your own company? Or let's say you have shares of any company, what you would be getting from the shares investments? Very right, Hassan. You would be getting the dividends amounts. So you will also be the shareholder of the company, extracting funds in the form of dividends. Very right. Now, these two are the possible options. These two are the possible options for extracting funds from your own incorporated business, from your own company. But these two have different tax implications. Let's say when you are only extracting funds from your own company in the form of employment income, the tax implications are different. And when you are extracting funds from your own company in the form of dividends, the tax implications are somehow different. What are the differences? What will be the tax treatment? Or there could be another option available: extracting funds in a mixed remuneration package, in a mixed package form. What does it mean? It's a third situation that you can extract funds from your own company in a mixed package form. Few amounts as employment, and few amounts as dividends. At times, examiner will ask you by giving, maybe possible this situation, that currently the person is extracting only the dividends from the company, or examiner can give you this situation that person is only extracting funds in the form of employment income. The other two possibilities are that is a mixed package form, that to some extent the person is getting amounts in the form of employment income, and to some extent the person is extracting funds in the form of dividends. So let me give you a detailed tax implication with respect to each and every option. Keep remember, in each scenario, we have to think from two perspectives. Number one, from the perspective of individual, and second perspective from the company. Let's say employment income for that specific individual person is taxable. Yes. Employment income which is given by company to that person, that employment income is a taxable income. And for company, it is allowed expense, because any salary given to employee is an allowed expense for the company. On the other hand, if we talk about on this salary, on the employment income, NICs are payable by individual person and also payable by company as well. Company would be paying NIC in the capacity of employer capacity. And furthermore, the person would be paying NICs in the capacity of employee. Can you please recap quickly that which NIC would be payable by individual person and which NICs are payable by the company? If you remember, could you please tell? So I can write here, think. Employee only pays class 1 NIC, which is based on gross cash earnings. Employer like company pays 2 NICs. One of them is class 1 NIC, which is based on gross cash earning. So we can conclude one point is that class 1 NIC is payable by both the employer and employee. Oh, very good, Danish. You answered the other query as well. Class 1A NIC is also payable by employer on the amount of net taxable benefits. GCE stands for gross cash earnings, and class 1 NIC, which is class 1A NIC, which is payable by company, by employer on the amount of net taxable benefits. So it means whenever a person would be extracting funds from its own company, from his own company in the form of salary or employment income, so these are the tax implications. For that specific individual, he received the salary. Salary is taxable income on which employee would be paying the tax liability. It is a taxable income and income tax liability would be calculated. For company, if company paid any salary to employee, that is an allowed expense for the company. And after deducting this expense, corporation tax liability would be calculated. And apart from tax liabilities of both the individual and companies, NICs are also payable by both the individual person and the company. Are you guys okay till now? Are you guys crystal clear with the things we have discussed till now? If you have any specific query, you may please ask, you may please raise your queries. I would appreciate if all of you please answer so we can move forward. Okay, now let's talk about the second situation. Let me copy and paste. So we can just mark the differences here. Now, If you are only extracting funds in the form of dividends from your own company for individual person, it will be classified as dividend income. And dividend income is also a taxable income. And we know one thing, that any taxable dividend income, first of all, we get the exemption of 2,000 for each person, means regardless of the status of taxpayer, whether the person is basic rate taxpayer or a high rate or an additional rate taxpayer, each individual person would be getting 2,000 pounds of dividend exemption before taxation. So for individual, now the funds are extracted in the form of dividend, that is a dividend income for the person. Income tax liability would be calculated. It's a taxable dividend income. For company, if the company has paid dividends to that specific shareholder, these payments of dividend have no tax implications. I repeat, dividends are also paid from the post-tax profits. Post-tax profits are those profits which are calculated after paying the corporation tax liabilities and all that. So corporation tax liability, once paid by the company from the retained profits, those profits can be distributed to the shareholders. So for company, if the company is making any dividend payment to a shareholder, that dividend payment have no tax implications for the company because dividends are always paid from the post-tax profits. Can you please tell me the NIC's implications for both the company and dividend? Is there NIC liability on the dividend amount? Yes or no? No NIC is payable in respect of dividends. And the same amount can be copy and pasted for the company, because on the amount of dividends, no NICs are applicable. It's not probably no, it's for surely no, because for getting dividend, there is no NIC for individual person and there are no corporation tax implications like NIC implications for the companies. You can think and can understand the last option very easily, where the person is now extracting funds in mixed remuneration, in mixed package form. In that case, on employment income, income tax liability would be calculated for person. Gross cash earning, on the basis of gross cash earning, class 1 NIC is calculated for the person, for the employee, and the dividend implications and employment income implications will remain for this will remain same for the company. So basically, all of these implications are applicable. All of these highlighted implications are applicable for the third scenario, where the funds are extracted in the form of mixed package form. So if you are clear with the things, we can move forward and we can start attempting the past exam paper, which is practice exam 1, section C, tax planning question. Okay. Let me share you the relevant screen. Okay, here we go. It's basically taxation practice exam 1. Question number it's section C, first question. If you don't know how to open the ACCA CB practice platform, so I can guide you. If you don't know that how to open these questions, how we can check where these questions are available, if you don't know, I can guide you. And if you already know this thing, we can start practicing question. Now, I can tell you the relevant steps. First of all, go to the accaglobal.com, the official ACCA website. Once the front page is open, scroll down and down. At the bottom of the page, you would be getting an option for past exam papers. Click on that. Then select your qualification, ACCA qualification, then your relevant paper, taxation. And once you click on taxation, there is an option available, practice questions on ACCA practice platform. Once you will be clicking on that link, it will ask you to open your account. So just put in your ID and password, the ACCA ID and password, and select your variant. Then you can access the practice exam 1, and which is open in front of us. Requirement for this 10-mark question requirement is to calculate the overall saving of tax and NIC. Keep remember, my dears, in exam, when you would be studying in exam, please allocate your precious time in quality planning. I repeat, please make sure you are allocating your precious time in quality planning. Now, what is quality planning? So basically, at times what happens is that we read the requirement in a plain form. No, we should read the requirement in a meaningful form. So what we are required to do, first of all, read the requirement, read it very carefully. If you are not getting the requirement in the first instance, read it again and try to achieve that what the examiner is asking and is expecting us to do. So here we need to calculate the overall saving of tax and NIC. So we should be calculating saving with respect to two things, the saving in tax and NIC. It's not mentioned for which we are required to calculate the tax saving and NIC. We don't know. We shall be knowing this thing after reading the scenario. So calculate the overall saving of tax and NIC for the year ended 5th April 22. If Joe had instead paid himself gross director remuneration of 8,000 and dividends of 46170. We need to calculate the overall tax saving and NIC saving for this year end if J had instead paid himself gross director remuneration of 8,000 and dividend of 46170. What does it mean? Let me guide you from here, from the highlighted area. It's basically a proposal. It's not currently happening. It's a proposal which is given in the requirement. We don't know what's actually happening there, but we need to compare two things over here. Number one is, let me guide you from the requirement. Number one is existing something happening. There is a proposal and we need to calculate the saving, the overall saving. We shall be knowing the existing by reading the scenario. Proposal is that instead, if he paid himself a gross salary of 8,000 and dividends of 46170, it's a proposal. We shall be taking the values, the calculation steps over here, and we'll be calculating the saving. Notes. You are expected to calculate the income tax payable by Joe. Okay. The class 1 NIC payable by both Joe and OK Joe Limited means, first of all, we shall be calculating the income tax liability. When there is word income tax liability, it means the taxation of individual person. NIC of individual person like employee NIC. From notes, we are getting what we are expected to do is that you are expected to calculate the income tax payable by Joe, the class 1 NIC payable by Joe, by the person, and OK Joe Limited, the company of the person. Next thing, the corporation tax liability of OK Joe Limited for this year. It means we are required to calculate four things. What are the four things? The income tax liability of the person, the NIC of the employee, the corporation tax liability of the company, and NIC of the employer of the company, NIC of the company. We shall be calculating these four things in both situations, in the existing scenario And by solving it again according to the proposal which is mentioned in the requirement of the question, then you would be finding the overall saving. So that will be the final answer for 10 marks. You should assume that the rate of corporation tax remains unchanged, and the corporation tax rate is 19%. Obviously, we all know this thing. If you forgot during exam that what's the relevant rates, what are the tax bands, what are the other things, so you would be having tax rates and allowances in the left hand bottom of the screen. Left hand bottom of the screen shows help and tax tables. Once you click here, there are three tabs: exam instructions, the tax tables, and CR questions help. The tax tables is relevant for us. The tax bands, rates, residency, car benefit percentages, multiple things are also available during your exam time, which you can access at any point in time during your exam. So as it is mentioned that you should assume that rate of corporation tax remains unchanged. So we know the corporation tax rate, that is effectively the 19%. So this amount, this cell amount would be the overall answer for our question. You are required to calculate four things: income tax liability, NIC of the employee, NIC of the employer, and the corporation tax liability. Employer means the company. For company, there will be corporation tax liability. Now, read this scenario very, very carefully. It's all about the existing model that a person is running its own company in which he may be a director or employee or the shareholder as well. So first of all, we shall be solving and would be placing amounts here. Then we shall solving this again by considering the proposal. The relevant amount will be placed here. Saving for each and everything separately and for overall tax saving. Okay, let's start reading the question. This scenario relates to one requirement. J is managing director and 100% shareholder of OK Joe Limited. As I showed you, whenever extracting funds from your own company, we have discussed the things. You are making your own company. Now you would be having three options. You can extract funds in the form of salary, and you can also have an option. You can extract funds in the form of dividends, or there is an option available. You can extract funds in mixed package form. So I don't know what is the current situation currently. I can tell you from the exam question scenario, currently the person is basically extracting the funds in the form of employment income. Currently the person is extracting funds from its own company only in the form of employment income, but proposal is that tax saving and NIC saving if the person extract funds in the mixed package form. J is a managing director and 100% shareholder of OK Joe Limited. He has always withdrawn the entire profits. Entire means all of the amount of profits. The remaining profits of the company, entire profits mean the total amount of remaining profits. He has always withdrawn the entire profits of the company as director remuneration. By reading this thing, by reading the first two lines of the requirement, I can tell you one thing: there will be no corporation tax liability. Why you are writing this thing? There would be no corporation tax liability. Can you please tell any one of you? By extracting the first two lines of the scenario, I have marked there will be no corporation tax liability or zero corporation tax liability. Can you please identify that why I'm marking this thing? Very right. As the entire profits of the company are given to person as remuneration, as a salary, so salary is an allowed expense for the company. So from the company profits, if the entire profits are withdrawn in the form of salary, so salary is an allowed expense for the company. It means there are no taxable profits for the company and no corporation tax liability, and hence no corporation tax liability. So that's a simple and sweet reason for this question. But Given a recent increase in profitability, he wants to know whether this basis of extracting the profits is beneficial. The business is growing, and considering the increase in profitability, he wants to know whether this basis means the current basis, the existing model of extracting funds, is that model is beneficial is beneficial overall or not. Furthermore, in the next para, for the year ended 5th April 22, OK Joe limited taxable profits before taking off director remuneration of 65,000, after allowing employers class 1 NIC. It's employer class 1 NIC of 6810. J director remuneration, J's gross director remuneration is 58,180. So we are basically solving currently the existing model. Person is getting the entire profits of 58,180 as director remuneration. So this amount has income tax implication for the person. 6810 is the NIC which is paid in the capacity of employer. So we can directly write 6810 here. What you did is that you just highlighted an amount and placed in your answer. So you would be getting marks for this thing. It's in the existing model, current company's class 1 employer NIC is 6810. So I have marked NIC of employer 6810 and corporation tax liability would be nil because the entire profits will be withdrawn in the form of salary. So two things are yet to calculate with respect to person. We shall be solving the income tax implications and NIC implications. So the answer, the values will be placed over here. Next thing, the figure of the employer's class 1 NIC of 6810 does not deduct the 4,000 employment allowance, as because Joe is OK Joe Limited's only employee, so employment allowance of 4,000 will not be available. From the tax purposes, we know one thing, that employers gets employment allowance of a year for a year, that is up to 4,000. But this 4,000 employment allowance will not be available in two situations. First situation is given in this question, is also mentioned in question. What's the other situation? This 4,000 employment allowance would not be available where the person is the sole employee of the company, because this 4,000 employment allowance is available there where you are hiring the other persons, where you are giving employment opportunities for your business to other persons. If you are not hiring other persons, if you are not creating employment opportunities, so this 4,000 employment allowance will not be available for the company, because this person, Joe, Mr. Joe, is the sole employee in his own company. So that is the reason employment allowance of 4,000 is not available. That's the first reason for the unavailability of 4,000 employment allowance. What's the other? Do you remember? I'm waiting for 30 seconds. Do you remember what's the other situation where this employment allowance of 4,000 will not be available? It's not mentioned in question. It's a generic point. I'm just discussing this for recalling purposes. You have 30 seconds to answer. Listen carefully. The first situation where this employment allowance of 4,000 is not available, where the person is a sole employee of the company. The second scenario, the second situation where this 4,000 amount will not be available, that is, if previous year employer's class 1 NIC is more than 100,000 pounds. I repeat, if previous year's employer's class 1 NIC is more than 100,000 pounds, then in the next year, this 4,000 employment allowance will not be available. Hopefully, you shall be remembering this point from now onwards. 4,000 employment allowance will not be available in two situations. Number one, when there is sole employee of the company. Number two, when the employer's class 1 NIC of the previous year is more than 100,000 pounds. In these two situations, 4,000 employment allowance will not be available. Furthermore, for the existing model, let me calculate this income tax liability. So let me mark it as working 1. So examiner will come to know that where we perform the working for calculating the income tax. The first column for the person will be non-saving column. We are calculating the income tax implication in the existing model. The first column in the income sheet of the person, there are basically 3 columns: non-saving, saving, dividends, and total. But for the timing, the only one source of income is available. So I'm just writing it as other income column or non-saving, employment income of 58180. No other source of income is given. So the same amount can be considered as total, and qualifying interest is also not available. So what happens is that from the total income, we deduct the qualifying interest to get the net income. But in the absence of net income, in the absence of qualifying interest, the same amount can be considered as net income. So the employment income, total income, and net income all are same. The next step is to deduct the personal allowance. Personal allowance is 12570 for this fiscal year. So finally, the taxable income is calculated as is equal sum bracket start. If we mark, if we select, if we highlight these two values after putting the formula, let me write it again. Is equal sign is used for starting any formula. We need to sum up these two values. One value is positive, other value is negative. So automatically plus minus minus, the resulting amount, the total income is calculated as if you are facing any kind of these errors, don't worry, select this cell, click on the format cells, it's custom, okay. So here we have the solution. If you are facing any problem in your exam, you may change the values from here. Taxable income is 45610. We are working for income tax liability, that is working 1. We have calculated the taxable income, and furthermore, from the taxable income, the first 37,700, the first 37,700 from the total taxable income, to this extent, the rate of tax will be 20%. $7,540 is calculated. Furthermore, is equal from the total taxable income. What I'm doing is that is equal for starting the formula brackets, total taxable income from which already 37,700 has taxed. The differential would be multiplied with 40%. You may also look here, the formula is equal B10 cell contain the total taxable income from which 37,700 has already taxed at basic rate, and the differential is taxed at high rate. Total tax liability is the sum of these two values, 10704. I have to link this cell value above here. What's the benefit of linking? I would be showing you the benefit of linking the cell value, how we can refer, how we can mark the cell reference, how we can link the cells. Basically, I want income tax liability, which is calculated here. Please do not write or copy paste in this cell. Just link these two cells. How? Is equal. Clicked on the same cell and press enter. Same amount will be reflected over here as the income tax liability. What's the benefit of this linking? If let's say if you have made any mistake in this calculation, I would be changing. I'm just taking it as 45% to just give you an idea. If this cell is multiplied with at 45%, 11099.5 is calculated. Automatically, it is reflected in the above cell. If you have copy pasted, don't worry, you would be getting marks. But there is a benefit of the linking cells. That is, if an amount is changed here, automatically reflected in an above cell, which we have marked as reference. So the excess amount would be taxed at 40%. Let me correct it. So the corrected tax liability is 10704, also shown in above cells as we have referred the cell. Number 2, NICs of employee. We are going to show NICs of the employee in working 2. Mark the reference of working 2 NIC, which is class 1 NIC paid by employee on the gross cash earnings. The gross cash earning in the question is only the amount of salary, that is 58180. And if you remember, for the calculation of for the calculation of NICs, to this extent, let me write it. If you forget the limits, you may follow from here. You would be getting the NICs amounts here. But as I remember, I can guide you that the first 9568, it's all about gross cash earning in total is, in this question, gross cash earning is the amount of salary. Gross cash earning is the sum of 3 things: salary, bonus, and commission. In the absence of bonus and commission, gross cash earning will be 58180, on which employer has to pay class 1 NIC. For the first 9568, there is nil NIC. Then from the difference of 50270 minus 9568, NIC is applicable at 12%, and total gross cash earning minus 50270, this differential would be multiplied at 2%. So these are the limits for the calculation of NICs. Now let's apply it to the relevant cell. To this extent, 9568, there is 0 NIC, is equal from 50270 minus, let me show the working in brackets. From this value, 9568 is deducted, and differential would be multiplied at 12%. So resultingly 4884 is calculated. In the third cell, I'm going to use the same formula, is equal brackets. Gross cash earning is 58180 in this question, minus we have calculated the NIC to the extent of 50270, and the differential of these two amounts will be calculated at 2%. As we are done with the NIC calculation, so let's take the sum. Total NIC in this situation is 5024. Again, I'm going to link is the NIC amount. As we have linked the liability above 10704, also going to link this 5042. We need this value here is equal this amount. So we are done with the existing things. Existing things shows all these amounts. The NICs, the income tax liability of the individual person, NIC of the employee, corporation tax liability is 0 because in the existing model, entire profits are withdrawn in the form of salary. So there is no profits retained by the company. So no income, no corporation tax liability. And NIC, which is paid by employer, that is also mentioned in question. So its employer NIC is 6810. Currently, the overall taxes for both the individual person and the company amount is 22556. Are you okay with all these calculation steps and the conceptual discussions we have made till now? What about others, please? Are you guys okay? So as marked, working 1 and working 2, we have calculated the relevant amounts. Working 1, working 2, corporation tax and employer NIC. Okay. Good enough to know. Thank you. Now, let's solve the proposal. The proposal is, if instead of extracting entire profits in the form of salary, in the form of director remuneration, if person extract funds in the form of director remuneration to the extent of 8,000 and dividends of 46170, what will be the overall tax saving and NIC saving? What will happen there? Think. We need to calculate these four things, but now in the proposed situations. We shall be calculating the income tax liability. Yes. Are we required to calculate any NIC paid by employee? Answer is 0. Is there will be any NIC for the company? Again, the answer is 0. Why I have marked both these values as 0? Could you please quickly identify the reason why in the proposal I have marked the employee NIC as 0 and employer NIC as 0? Just think. I'm giving you 30 seconds time. It's a very basic reason why I have marked in the proposed situation where the person would be getting salary to the extent of 8,000, why there will be no class 1 employee NIC, why there will be no class 1 employer NIC. The reason is very simple. Because class 1 NIC is paid by both the employer and employer based on the gross cash earnings, and the gross cash earning to the extent of 9568, there will be no NIC. The limit for gross cash earning to the extent of the first 9568 gross cash earning, there is no NIC for the individual person as well as for the company. Are you okay with this point? Why I have marked 0 in the proposed situation, NIC 0 for employer and 0 NIC for employer? The reason is NICs, the class 1 NIC is payable where the gross cash earning is more than 9568, because first 95 to the extent of first 9568 there is nil NIC. So that is a simple reason I have marked the 0 NIC for employer, 0 NIC for employer. Are you okay with this point? And that's the key point. If you have calculated any amount in your exam, you would be losing your marks. It means two things are yet to calculate. Number one is like income tax liability of the individual person and the corporation tax liability of the company. For this, let me mark a reference. I'm just skipping a cell. This amount would be calculated in working 3, and this amount would be calculated as working 4. Let me show you the workings. Working 3 now. We are calculating the income tax liability of the person. How we can calculate? You can see in the proposal, the person is extracting funds in a mixed remuneration package. Like 8,000 are extracted in the form of salary. The remaining amounts are extracted in the form of dividends. If we need to calculate the income tax liability for the person, the relevant columns will be the non-saving column, and the other column will be the dividend income column. And lastly, the total income column. We are working here for the working 3 and calculating the tax liability of the person. According to the proposal, person is now extracting profits in both forms, the salary and dividends. Employment income is only 8,000 is part of non-saving and also reported to total. Furthermore, dividend income, how many profits are extracted in the form of dividends? 46170. So if you have extracted 46170 from your own company as dividend, so the total of each column will be and the total sum in the last column. In the absence of any qualifying interest, so same would be the net income. Let me write in from the total income, what we deduct is that qualifying interest. But if the qualifying interest is not given, so that this net total income is also considered as net income. From the net income, now let's deduct the personal allowance. Personal allowance is available for each individual person to the extent of 12570, but first column income is available to the extent of 8000 and differential amount of 12570 minus 8000. The remaining personal allowance would be deducted from the dividend and differential. The total personal allowance is also deducted from the last column. After this deduction, taxable income for this column is equal sum, positive negative value becomes nil. Dividend income for taxable income for second column is equal sum bracket, only one amount is there, okay, is equal sum. As it's a negative sign, how we can show it as negative? Because personal allowance is deducted, how we can show it as a deduction? In between is equal and bracket, just mark minus sign, so you would be getting a negative figure here. How? What was there? We just calculated a positive remaining amount of personal allowance, but we know one thing, that personal allowance is deducted. What we can do is that from the is equal and bracket, just place a negative sign and then finally place your formula is equal sum, the total and minus personal allowance, it's 41,600 is equal sum bracket start. For the last column, it will be the same amount as well. You can see in the taxable dividend column, no taxable income is available for the non-savings and only the taxable income is dividend there. 2000 dividend is exempt. We are calculating the tax liability for the first 2000 of dividend, it is exempt. First band limit is 37,700, from which 35,500 is remaining. Where from we are getting this 35,500? Let me show this thing. The basic rate band limit is 37,700. Exemption also covers the band limit, and differential is 35,700. On this value, the dividend amount which is falling in the basic rate band, the rate will be 7.5%. 2677 is calculated. Now, finally, the total dividend income was 41,600, of which 2,000 is exempt. And from this amount, 35,700 falling in basic rate band, on which 7.5 is already calculated. Differential would be multiplied at 32.5%. Okay, let me show you the amount first is equal. The total dividend income was 41,600, of which 2,000 is exempt, and the first 35,700, the remaining amount is 3,900. On the remaining amount of 3,900, high rate of tax is applicable is equal on this amount. High rate of tax is 32.5%. 1267 is calculated. In this case, you can see the total tax liability is basically an amount of 3,945. Let me refer here. Income tax liability in the proposed scenario. Income tax liability in the proposed scenario we have calculated in working 3 is equal sign. It's 3,945 also reflected here. NIC would be 0. If you want, you can write a note as employment income is less than 9,568. So that's the sweet and simple reason why there is no class 1 employee NIC. Same reason can be mentioned here as employment income is less than 9568 because it's only an amount of 8,000. So that's the reason there is no NIC. The last thing is for corporation tax liability, as we have marked the reference as working number 4. So let me show you the working number 4. In the working number 4, we are required to calculate the corporation tax liability. The profits for the company are 65,000. Company profits are working 1 for corporation tax liability. Company profits are 65,000, from which salary expense is deducted, which is given to employee, which is 8,000 in the proposal. Remaining profits are 57,000, on which corporation tax is applicable at 19%. What's the 19% of this value? Is equal this multiplied by 19%. So there's a corporation tax liability of 10830. We need this value here. Is equal sign corporation tax liability. In the proposed situation, if you add all these amounts, it's becoming 14775. When the entire profits are withdrawn as director remuneration, the overall the sum of these four things was 22,556. But as per the proposed situation where the amounts are withdrawn in both forms, like employment income and dividend income, then in the proposal the total amount is calculated as 14775. So finally, to calculate the tax saving, what is the last step? Put the equal sign, select the amount, the total amount based on the current situation, minus the total amount based on the proposed situation if the person extract 8,000 salary and 46,170 as dividend. 46,170 as dividend. So what will be the tax saving? The overall tax saving will be 7781. In fact, you can also calculate is equal this amount minus this amount is equal this amount minus NIC is equal sign this minus this is equal sign this minus this. I would be placing another formula just to make you comfort. Is equal some bracket start. If we select these four values, the value will remain same. 7781 calculated from existing total, deducting the proposed total. This value is calculated. Then in the next step, we calculated each column value separately and then added all these four amounts to get the total tax saving, which is 7781. So being a tax advisor, what will be, if it is asked, what will be your advice? Whether the person should cut or whether the person should opt for the proposed model. So what will be your advice? Is there any tax saving? Yes, obviously there is tax saving of 7781. It means extracting fund in both form is beneficial for both the person and the company, because overall tax saving is by 7781. Are you guys okay till now? What about others, please? Evans and Usama. It's not that difficult as we think. You can see and read requirement very carefully and identify what exactly is required to do. Then read scenario carefully and you can solve this question very easily. All right. Another question which we are going to do is that It's a March, June 22 question. It's a March, June 2022 question, and we shall be starting this question right after 15 minutes break. It's 3 past 6 at my end. I would be starting right after 15 minutes and will be solving another exam question on the ACCA CBE practice platform. All right, welcome back. Let me open up the second question. How you can assign a paper to yourself. I just clicked on taxation, then UK ACC official resources, past exam library, and the next question is from the March, June 22. I have assigned this paper to myself and remaining are written as assigned. Any paper which you have already assigned, that will be shown on left hand side. There are multiple things I have assigned to myself, TX practice and past and practice exam. So the next area is March, June 22. Let me resume this. And as we are going to attempt the income tax question from section C, how we can move forward. Here is navigator button available, and I have to move to question number 1. It's about 10 marks requirement. It's a tax planning question, but our agenda is the income tax question. There are basically 3 requirements of this question. Number 1, assume that Poppy claims loss relief against her total income for the fiscal year 21-22. Calculate her taxable income for this year. No need to calculate the income tax liability, just calculate the taxable income, but after claiming loss relief from the total income. It means, first of all, we shall be adding the sources of income of the person. It's not Poppy Limited. If it is Poppy Limited, so it's the question pertaining to corporation taxes, but this question is for income taxes for the taxation of individual person. Assuming that Poppy claims loss relief against her total income for the fiscal year 21-22, calculate her taxable income for this year. Okay, fine. What's the second requirement? Can we move forward directly? No, because we have not navigated the screen. We have not scrolled down the screen. Once we're done with the scrolling, we are having the second requirement in front of us for 2 marks. Explain how Poppy's income tax liability in respect of taxable benefits for this fiscal year will have been collected, and if any forms containing detail of these benefits will have been reported to HMRC. It's a theoretical area. Answer is in front of us, but I shall be guiding you what exactly is examiner asking and what exactly should be our answer. I would be guiding you. What's the third requirement? Advice P of the interest and penalties that will be charged by HMRC as a consequence of her not making the balancing payment for this tax year 2021 until 31st August 22. It's basically examiner is asking you what are the tax implication of interest and penalties for the balancing payment if the balancing payment paid late. Moving back, and I'm going to start reading the question first. Question is, Poppy is employed by ZPLC and she is also a member of partnership. 2 sources of income are from the first line of the question. As a person is employed, so it's the employment income, and also she's a member of partnership business, so the other source of income would be the trading income, because from tax perspective each individual partner is treated as a separate sole trader. So Poppy's first source of income is employment income and second source of income will be the trading income. The following information is available. Employment. During the tax year 21-22, P was paid a gross annual salary of 65,000 in respect of employment with ZPLC. If we need to start the question, first of all, as we have the first head of income, we also mark this heading employment. The first thing from the situation, from the scenario is salary. So we have just marked, we have typed the amount of salary, which is 65,000. If you read para 2, during the period from 1st August to 5th April 22. So basically it's a time period of 8 months. The month of August, September, October, November, December 22, December 21, Jan 22, Feb 22, and March 22. Please do not count the 5 days of April, right? So from 1st August 21 till 5th April 22, there are 8 months time period. ZPLC provided P with a diesel powered car, which has a list price of 21,800. Whenever car is provided by employer, so the car benefit would be calculated. The motor car cost company 20,600. You can see it's a list price of 21,800, but company purchased this car after getting a discount and company paid 20,600. For the calculation of car benefit, if both values are given, means the undiscounted price and the discounted price, we shall be using the undiscounted list price for the calculation of car benefit. For the car benefit, keep remember undiscounted list price is relevant for us. The motor car, and further point to note is that it's a diesel car. Why I'm highlighting it's a diesel car? Because if diesel car is meeting real driving emission 2 standard, no need to take 4% additionally. If the diesel car is not meeting RDE2 standard, then in the relevant percentage, we shall be adding further 4% because this diesel car would not be meeting RDE2. But what exactly is the situation? Continue reading. The motor car costs ZPLC 20,600 and has an official rate of 75 grams per kilometer. The motor car does not meet RDE2 standard. It shows we shall be taking 4% additionally in the calculation of CO2 emission percentage for car benefit calculation. P was not provided any fuel for private use. From the second point of the employment, we have marked it as car benefit, but how we did calculate this amount? I can show you the formula is equal. Undiscounted list price of the car is 21,800 into. We don't know for the time being, we don't know the CO2 emission, which is calculated as 23%. I would be guiding you how I'm using 23%, where from I'm taking this 23% multiply by. Car was provided from August 21 till 5th April 22. It's a time period of 8 months, so it's 8 divided by 12. If you solve this fraction, the amount is calculated as 3342.667. The same formula has marked here. But you can see in this calculation, I have mentioned as 23%. But in the earlier calculation, it is referred to as cell that is E6. E6 is this 23%. How we can calculate the CO2 emission? If car CO2 emission is more than 55 grams. So for the first 55 grams per kilometer, the relevant emission will be 15%. And additionally, like from the actual CO2 emission of the car, we have deducted D2. What is D2? From the 75, the differential is deducted because for the first 55, the relevant is 15%. And this axis is to be divided by 5. Then we are getting 4%. How? If you remember the rules, for the first 55 grams per kilometer, CO2 emission will be 15%. And from every 5 increase in CO2 emission, 1% would be added here. So what's the total axis? From the 75, the actual CO2 emission, minus 55, the differential is 20. This 20 is further divided by 5 because for every 5 increase in CO2 emission, 1% would be added. So 20 divided by 5 is equal to 4. By adding 15 plus 4%, it's 19%. Why we are taking this 4%? Because RDE2 standard of the car is not met. So that's the reason the total CO automation is calculated as 23%. And lastly, please be with me again, is equal 21,800, the undiscounted list price. Keep remember, we are not using the discounted price. We shall be using the undiscounted list price to be multiplied with the CO automation calculated and to be month apportioned according to the number of months CAR given to employee. So 3342.667 is calculated as CAR benefit. Next thing. In employment income, we are talking about the first source of income. We shall be taking the total income, then we'll deduct the loss, we'll be getting the net income, and the taxable income will solve the requirement for 10 marks. In the third para, throughout the tax year 21-22, throughout term shows for whole of the fiscal year, ZPLC provided Poppy with 2 mobile telephones. As we remember the knowledge from employment income, 1 mobile phone is exempt. Second one will be taxable under the head of asset usage benefit. I repeat, if more than 1 phones are given to employee, 1 is exempt, remaining are taxable in the head of asset usage benefit. It is evident from the scenario that 2 mobile phones were given to employee. The telephone had each cost 480, means each mobile phone cost is 480 when purchased by the company in March 21. This phone is purchased by the company in March 21, and then from 6 April 21, this fiscal year started. And for this complete fiscal year, the phone was given to employee. So the due to this mobile, asset usage benefit would be calculated. How? What's the formula? It's very simple. Is equal sign, the cost of phone is 480 into 20%. And if you further want to do is that 12 upon 12 means the month portion. If this asset is provided for few number of months, for less than 12 months, so obviously we shall be taking the month portion benefit, but it's 96. In fact, even if you don't write this 12 upon 12, still you would be getting the same amount because this amount is calculated for the fiscal year. Number 4th point in employment income, all of the taxable benefits provided by ZPLC to Poppy are payrolled. This point has nothing to do with the first requirement. This statement that all of the benefits are payrolled, all of the taxable benefits are payrolled, this point, the 4th point of employment income, has nothing to do with the first requirement. But keep remember, very important point. Nothing is given in exam due to any reason. If there is anything which is in the question that has some weightage, that has some link to any part of the question. So basically, based on this statement, requirement number 2 is asked. Explain how Poppy's income tax liability in respect of taxable benefits will be reported and collected to HMRC by HMRC, and with respect to forms, etc., we shall be discussing. This statement has link with the requirement 2 of the question for 2 marks. So I repeat for the last time, nothing is given in exam without any reason. If there is anything available in exam that has linked somewhere with your answer, with your requirements. Although we have calculated the employment income, so let's move forward towards the second source, because she is also a member of partnership. So calculating the partnership profits. Poppy's, that is the reason we have marked this heading as partnership. In the heading of partnership, what we are required to do is that Poppy has been in trading with Rose and Tea since 6 April 13. So it's an ongoing business. For ongoing businesses, profits are calculated based on the current year basis. And in 2 situations, we cannot use a current year basis. Number 1, when there is business started. Number 2, when there is business cessation. At time of business start and at time of business cessation, current year basis rules are not applicable. Rather, we use basis period rules in both situations. So keep remember, when a new business is started or a business is ceased, basis period rules are applicable. But if the business is ongoing business, then the taxation for such businesses is according to current year basis rules.
And what is the current year basis rule? We shall decide the fiscal year according to the accounting end date of the business. For example, if a business accounting end date, if an ongoing business accounting end date is falling like in the April 21, May 21, June 21, July, December 21, March 20, Jan 22, Feb 22, March 22. So all of these businesses, if the accounting date is falling in a fiscal year, so in that specific fiscal year, the profits will be taxed. So that's a rule under the current year basis. But from this date, it's reflected as the business is an old business, it's an ongoing business. It started from 6 April 13. It's not a new business. So means for this business, the taxation, the fiscal year would be decided according to the current year basis. P has always in partnership with R and T, but T resigned as a partner on 6 July 21. This date is very important. Our relevant fiscal year 21-22 started on 6 April 21, then 6 May 21, then 6 June 21, then 6 July 21. It means for the first 3 months, there were 3 partners, but for the remaining 9 months, there will be 2 partners. I repeat, if you read it carefully, for the first 3 months to this date, 6 July 21, there were 3 partners, but for the remaining 9 months, there are only now 2 partners. And how they share profit? They always share profit equally. Whether they are 3 partners or whether they are 2 partners, they would be sharing the profit amounts equally. Profit means profit or losses. Number 2, for the year ended 5th April 22, the partnership had a tax adjusted trading loss of 19,500. It's not a profit situation, it's a loss situation. This figure is before taking account of capital allowances. Although it's a tax adjusted trading loss, in which means this amount of 19,500 is calculated after making all tax adjustments, but yet to deduct, which is capital allowance. For the capital allowances, third para is relevant for us. The only item of plant and machinery owned by a partnership is a motor car, which has a CO2 emission of 90 grams per kilometer. The motor car was used by Poppy if in a business, if there is an asset which is private, which has a private use as well as a business use. For that specific asset, we create a separate column named as privately used asset, and that column is reported separately. And on the disposal of that asset, we also require to make the balancing adjustment. Balancing adjustment means now if there is a separate asset is recorded in a separate column, and now the asset is sold, no need to continue the column, eliminate the column, make the column balance as nil. For making the balance column as nil, we do the balancing adjustment, and in balancing adjustment there are 2 things: balancing allowance or balancing charge. When to take the balancing allowance? When there is loss on disposal. When to take the balancing charge? When there is gain on disposal. So it is basically an asset which is recorded in a privately used asset, and this asset has a tax return on value at the start of the fiscal year was 8,400, but this was sold on 31st July 21 for 5,400. The book value of the asset was 8,400 pounds, but the disposal value is 5,400 pounds. So the disposal value is 5,400. There was some issue with my internet. Am audible now? now? Okay. As we are talking about the capital allowances, so we created a column named as privately used asset, brought forward balance is 8,400. This asset is sold for 5,400, and basically there is a loss. For making this column balance as nil, because privately used asset, once they are sold, column balance is to be nil. For making this column balance as nil, what we are doing is that we are taking the balancing adjustment, and in the balancing adjustment we have written it as balancing allowance, not the balancing charge. Allowance means loss. There the book value of the asset was 8,400, you disposed it only for 5,400, so this is the loss amount. For claiming loss, there is balancing allowance, it's a negative value. Positive, negative is nil. You can see it's a positive, negative, it's nil. But to which extent we can take the allowance amount? We are not taking the 3,000 in total here. Why? Because this asset is 70% used for private journeys. So the any allowances, any capital allowances are considered to the extent of the business use. So which formula is mentioned here? You can see in the allowance column how this 900 is calculated. It's very simple. The balancing allowance in total was 3,000, but we can take it to the extent of the business use, that is 30%. So this 900 is calculated. Then we have linked this 900 less capital allowances is equal sign, select the relevant amount. So that is shown here. The tax adjusted trading loss for 12 months is calculated as 20,400. And as it's a partnership business and one partner is living during the year, and if one partner is resigning during the year, so we shall be bifurcating the profits into 3 months and 9 months. So basically it's a total loss of 20,400. We are distributing this loss into 3 months and 9 months. There are 3 reasons when the partnership P&L appropriation account is month apportioned. Number 1, what are the 3 situations where the partnership P&L appropriation account is month apportioned? Number 1, when new partner joined the partnership business. Number 2, when the existing partner leaving partnership business. Number 3, number of partners are same, no one is joining, no one is leaving. But if during the accounting period, if the profit sharing ratio is changed, so these are the 3 reasons when the P&L appropriation is to be month apportioned, as we have calculated the profits or losses for 12 months, but now taking the same amount of loss into 3 months and 9 months. How we have bifurcated? You can see the formula is equal sign. We selected the value of 20,400, which is available in B11, into 3 upon 12 means the total loss for 3 months. And same case for the next, is equal sign. B13 is the same cell in which the total loss is available, into 9 upon 12, the remaining 9 months loss. Why we are done with this step? Because they always share profit and losses equally, and we are calculating and we are working for Poppy, and for calculating the Poppy Poppy share of loss, you can see Poppy 3 months loss share, Poppy 9 months loss share. It's a total partnership 3 months loss, it's a total partnership 9 months loss. How we are calculating for Poppy 3 months loss? Simply 5,100 is divided by 3. Why 5,100 is divided by 3 here? Because for the first 3 months there were 3 partners, and anything, whether it's profit or loss, that is to be shared equally. So that's the reason we are taking the total amounts, we are dividing it by 3, because for the first 3 months time period there were 3 partners, and for the remaining 9 months there were only 2 partners. So the 9 months loss is basically 9 months loss is basically divided by 2. It means Poppy share of loss for the first 3 months is calculated from the 5,100, and Poppy share of loss for 9 months calculated from the 15,300 by dividing it by 2, because for the rest of the 9 months there were only 2 partners. So the total Poppy trading loss was 9,350, the sum of these 2 values. This sum function is applicable over here because both the values are negative signs. And according to mass rule, negative is positive. So the total loss for Poppy for this year is 9,350. Are you guys okay? We are done with the discussion of the partnership Poppy share of loss as well. Are you guys okay till now? now. That is UK government securities gilts. Normally, the saving income is taxed on cash or receipt basis, means the actual amount which is received in a fiscal year. But specifically with respect to the gilts, which are government securities, gilts are gilts are taxed on accrual basis upon meeting the certain condition. First condition for gilts is when the nominal value is more than 5,000, and number two, when the gilts are sold during the year. So you can see on 1st Jan 22, fiscal year will end on 5th April 22. Before end of fiscal year, on this date, on 1st Jan 22, Poppy purchased 50,000 gilts with a nominal value of 40,000. Nominal value is more than 5,000. So on the gilts, accrual basis is applicable. The gilts paid interest at 3% with interest paid half yearly on 30th June and 31st December based on the nominal value. We sold the gilts on 31st March 22. You can see the purchase date is Jan 22. From Jan 22, Feb 22 and March 22, after 3 months, the gilts are sold for having the capital gains, because these gilts are traded in active market. And if the person is selling the gilts for 50,300, which he actually purchased for by paying 50,000, now selling for 50,300, basically person wants to take a capital gain, and this gain on the gilts is exempt from capital gains. I repeat, if there is any capital gain on gilts, that is exempt from capital gain tax perspective. But on the other hand, interest for the holding period would be accounted for. So for the gilts, interest income is accounted for on the accrual basis. How we did calculate 300? Nominal value is to be multiplied the interest paid at 3%, and to be month portion, which is 3 months, from Jan 22 till March 22. So for these 3 months, we have calculated the interest on accrual basis. That is 300. Keep remember, my dear, these percentages are given for whole of the year. 3% is not per month rate. 3% is for yearly rate. If we need to calculate the whole year interest, simply multiply it, the total amount, which is 40,000 into 3%, the interest will be for the whole of the year. So any of these percentages which are given, these are for year percentages. But as we are holding the gilts for 3 months, so we are taking the 3 months interest by multiplying the 3% into 3 upon 12. This statement means, Hassan, try to understand. This statement means, for example, if you have invested 40,000 in gilts, you would be getting 3% interest for the year. Means a total amount of interest will be 1,200 for the year. But you would be getting the interest income in 2 halves. From the total 1,200, 600 will be received on 30th June. And remaining 600 will be received on 31st December. So there's an interest payment date, and this total interest is divided and paid to the investor in 2 occasions on 30th June and 31st December. Is that okay? But you didn't wait to get the interest amount, because you have agreed. What was the greedy element? You purchase the gilts for 50,000, now disposing it for 50,300, and the gain is exempt from capital gains. So, but it's still on the gilts amount, accrual basis is applicable, and you calculated and marked 300 as the interest income of the Poppy. In the next step, I'm not going to read the last because it's pertaining to the third requirement of the question. So we are done with the calculation of employment income. We are done with the calculation of trading loss, and we are done with the calculation of interest income. Read the requirement again. You can see there is a loss from the trading profits. The loss for the 12 months time period is total loss is 9350. Examiner is asking you that how Poppy can adjust this loss, and then after adjustment of this loss, calculate the taxable income for the year. We shall be adjusting this loss, and for this purpose, income sheet is required to be prepared. In the income sheet, non-saving income, saving income, third column is for dividend, but dividend income is not given in question, so ignoring for the time being. The first column for non-saving, second for saving, and third for total. Employment income is 68438. We just mark the reference of B5. In B5, this amount is available. Saving income is like trading loss is nil. Why we have written as nil? Why we are not putting this amount of 9350 here? Because losses are never reported in the income sheet. Losses are not required to be reported in income sheet. If there is loss in any head in the income sheet, instead of loss, we always mark the loss as nil, because this loss will be adjusted from the total income. So that's the reason whenever there is loss, we shall be marking it as nil. And third source of income is 300 reported in the saving income column. And this 300 is linked with the cell B18 in which this value is available. Total income for this person is 68793 less current year trading loss, because as per the question, examiner is asking you that how the person would be adjusting this loss. From the total income, current year trading loss is deducted. Then income after loss adjustment is calculated as 59389. And for the sake of this, you can see I have referred this amount here because it's a Poppy's 12 months trading loss. From the total income, if this loss is adjusted, remaining 58389 is calculated. And finally, deduct the personal allowance, so the taxable income is calculated, and that was the simple requirement to calculate the taxable profits after the loss adjustment. Are you guys okay? Which is pertaining to scenario is same on the left hand, but the requirement is now changed. Explain, first of all, read this statement which is mentioned in employment. All of the taxable benefits provided by Z PLC, provided by company, provided by employer to Poppy to employ are payrolled. Before discussing the answer, let me tell you 2 to 3 statements. Normally in UK, employer runs pay system. Pay stand for pay as you earn. Who runs the system? Employer's responsibility is to operate a pay system. Employers are required to operate a pay as you earn system. It's not the obligation of employer. It's the obligation of employer to operate a pay as you earn system. And in pay as you earn system, what happens is that an estimated amount of tax is deducted from the monthly salary of each employee. What happened in pay system? Employer who operates pay system deducts an estimated amount of tax from the employee's monthly salaries. And as I'm using a word estimated tax liability, how they make this estimation? Let's say if I'm the employer in a UK company, my employer, my UK employer is operating a pay system. How that employer can deduct estimated amount of salary? Basically, employer would be checking what's the salary of the person, what is the benefit, what are the benefits given to person, and but what is the bonus amount, what would be the expected commission. Based on these estimations, an employer
would be calculating my total tax liability for the year. Keep remember, it's an estimated liability. And then to be divided by 12, an X amount will be calculated, and that X amount will be deducted from my monthly salary. And in the pay's estimated monthly tax liability, all of the benefits, all of the taxable benefits are also added in the pay system. But it's not necessary to add all of the taxable benefits to the pay system. I'm telling you, let's say 10 benefits, 10 taxable benefits are given to employee. From the 10 taxable benefits, 5 are the part of payroll system. The 5 benefits which are the part of payroll system means they are automatically reported to HMRC on a monthly basis, because payroll system means pay system. If a thing is a part and parcel of pay or payroll system, it means the information pertaining to that specific area is automatically reported to HMRC on a monthly basis, because this pay system is also linked with the HMRC. I'm giving you an example. Let's say my employer is giving me 10 taxable benefits and 5 of them are payroll. Or rephrase this statement, from 10 taxable benefits, 5 benefits are payrolled. Means they are the part and parcel of the pay system. And any taxable benefits which are the part and parcel of the pay system means HMRC would automatically be knowing that which benefits I'm getting from my employer. But in actual, I'm getting the 10 benefits, but only 5 are payroll. So HMRC would also be knowing to the extent of the benefits which are payroll. What about the remaining 5 benefits? Should we not inform HMRC whether employee is getting the other 5 benefits, or we should inform HMRC the other taxable benefits are? Yes, we have to inform about all of the taxable benefits. Few of them are reported to HMRC through pay system, and remaining benefits would be reported to HMRC through a form named as P11D form. But as evident from the scenario, all of the taxable benefits provided by employer to employee are payroll. What does it mean? Explain how Poppy's income tax liability in respect of taxable benefit for this fiscal year will have been collected, and if any forms containing details of these benefits. No, if all of the benefits are payroll, means we are not required to fill up any other form, because all of the benefits are payroll, means they are automatically part and parcel of the pay system. They are automatically reported to HMRC, and in this case, no need to form any additional form. And in this case, no need to fill up any additional form. So what we can answer is that for gaining 2 marks, the relevant answer would be Poppy's all taxable benefits are payroll. It means the income tax liability would have been collected through pay system. As all of the taxable benefits are payroll, it means income tax liability would have been collected through pay system. Furthermore, payroll benefits are not required to report it to HMRC through any form, as they are already automatically communicated to HMRC through pay system. Any taxable benefit, if are not payroll, then they have to be reported to HMRC through P11D form, but not in the case of Poppy, because Poppy's taxable benefits are payroll, means they are automatically reported to HMRC through pay system. If any other taxable benefit is there which is not payroll, for that specific benefit, we should be filling a form to inform HMRC, and the form name would be P11D form. Is this clear? Normally what happens is that we are not able to answer such requirements, because we don't get the requirement. We don't know, we don't have the knowledge for such requirements. So are you guys clear now? And inshallah, if you would be having the same requirement in any question, you would be solving that very easily from now onwards. Okay. For third requirement, moving forward, we need to tell about the interest and penalties on the balancing payment for the previous tax year until 31st August 22. Read the last para of the question, think what should we do, and plan out your answer. I'm giving you 5 minutes time to read this relevant para,
and to read the requirement for 3 marks. It's about two things: interest and penalties on balancing payments which are to be paid late for this fiscal year till 31st August 22. Your 5 minutes time starts now.
Hopefully you have done with your planning. Balancing payment for this tax year 2021. Poppy filed her self-assessment tax return for the previous tax year by the filing date. But keep remember the tax return was filed on time, but did not make the balancing payment of 2600 until 31st August 22. She was not required to make any payment on account, means no need to pay. She was not required to pay tax in installments. What will happen now? First of all, we shall be writing the general points, and then afterwards we shall be linking the general point to the question specific requirement. Balancing payment is required to be made January 31st after fiscal year. If it is paid late, then both the interest and penalties are applicable. Thereafter, for the fiscal year 2021, balancing payment, Poppy was required. Keep remember this fiscal year started from 6 April 20 and ended on 5th April 21. It's not fiscal year 2021, 21, 22. It's about the previous fiscal year requirement. For fiscal year 2021, Poppy was required to pay balancing amount till 31st Jan. What is the 31st Jan after fiscal year? Fiscal year is ended on 5th April 21. After this date, the date will be 31st Jan 22. But as she had paid late on 31st August 22, then the penalty would be 5% of the unpaid tax. Why it is 5%? Because according to rule, it's the time period is more than 6 months. Why it is more than 6 months? Because the required amount was required to pay till 31st Jan, but Feb, March 22, April, May, June, July, August, it's about 7 months time period. So whenever there is balancing payment late for more than 6 months, it's basically a time period of 7 months from Jan 22 till 31st August 22, 5% of penalty would be applicable, and interest would be charged at, do you remember the interest charge percentage? At what percent interest will be charged? 2.6%, that is fixed for the fiscal year. Hence, penalty would be 2600 multiplied by 5%, and it's equal to 130 pounds. Interest would be 2600 into 2.6%, which is for the year, but interest is to be month of portion because we are 7 months late. From Jan 22 till 31st August 22, it's a time period of 7 months. So 2600 into 2.6% into 7 upon 12 becomes 39. So this is how you would be getting 3 marks. First of all, you
address the general point, then you link the general point with the question specific scenario, and finally calculated the penalty amount as well as the interest amount. Is that fine? Are you guys okay? If you have any question and clarity, you may please ask. What about you, Evans, and other students, please? All right. So just keep it till here for today. And inshallah, we shall be practicing MCQs in tomorrow's session. I would appreciate if you please try to attempt the same questions on the ACCA CBE practice platform at your own. So it's going to give you the advantage and the benefit for passing your exam. Because at the end of the day, that's the pattern we have to follow in our real exam situation. So it's worthwhile to practice question on the CBE practice platform. If you have any specific queries for today's session, you may please ask, otherwise we can conclude it, and inshallah, we'll see you tomorrow. Would appreciate your active responses, please. Are you clear with everything? Or is there any unclarity? All right, my dears, inshallah, see you tomorrow. Take care, bye, and thank you for the participation. Thanks for your time. Thanks for joining this session. Hopefully, these questions help you a lot for understanding things. Basically, the key point to pass exam is understand the requirements and act accordingly. If you are unable to understand the requirement, how you can solve your requirement. So only way to pass TX exam is to practice more and more and more. Inshallah, you will pass your exam. See you in the next class. Take care and Allah Hafiz.